Mortgage arrears soar. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I've got my stein of coffee and it is a wonderfully hot Saturday in Brisbane today, so I thought we would have a look at this speech, the transcript of a speech completed by Guy Debelle, the Deputy Governor from the Reserve Bank of Australia, regarding mortgage arrears and how, well, if you have a look at the figures he's showing, they are soaring. They are really soared in the last few years. So let's have a look at what he's saying here. Today I'm going to talk about mortgage arrears. Arrears are an important indicator of the financial health of households and so have implications for our assessment of current economic conditions and the economic outlook. They clearly are also an important indicator of the financial health of those writing mortgages, be it banks or non-banks. I will draw on material published in the October Financial Stability Review and a speech given by my colleague Jonathan Cairns. The mortgage arrears rate at 1% is low by both historical and international standards. Arrears in the US peaked at around 10% in the financial crisis. Non-performing loans currently pose little risk to the health of financial institutions. This is not surprising in an environment where the unemployment rate is low and interest rates have been declining, or interest rates have been slashed. Nonetheless, the arrears rate has been increasing steadily over recent years to the highest it has been for around a decade, and so warrants some scrutiny. There you go. I mean, the highest it's been in 10 years, and interest rates are the lowest they have been in a very long time. Now, what I'll do is, let's just bring up here Trading Economics, and we will jump over and we'll have a look at the interest rate, the cash rate for Australia, just for those of you that aren't familiar with it. But we can look at it over a historical perspective, and this is a great website to source this data. Now if we go here to, where am I looking? Interest rates, there we go. And let's jump out to, he's saying 10 years. So now this is the 10-year period, and our arrears rate is the highest in the last decade. Look at our cash rate. Just bear that in mind, everyone. That means people are going in arrears, the highest level in a decade, when interest rates are significantly lower than they have been at any other time in that same period. So, while the national arrears rate is low, in some parts of the country, households have found it harder to keep up with their mortgage repayments. The largest increase in housing loan arrears has occurred in Western Australia and the Northern Territory, where economic conditions have been weak and the unemployment rate has risen. Developments in those two regions show how arrears can evolve in adverse economic circumstances. In Western Australia, the unemployment rate has risen from 4% to 6%. Housing prices have fallen by 20%, incomes have declined, and strong inward migration turned to outward migration, such that population growth declined from over 3% to under 1%. These conditions have seen the mortgage arrears rate rise from 0.7% to 1.8%, more than double. This is a significant rise and associated with financial stress for a number of households, but it is still not high enough. Is still not that high given the economic circumstances. Well, I mean, have a look at this, guys. Look at this chart here. Mortgage arrears rates in Western Australia and the rest of Australia. Look how high they've climbed. What is interesting, what is concerning is, saying they're not high doesn't matter as much as the trend. Borrowers can fall behind on their mortgages for a number of reasons. The vast majority of people who fall behind on their mortgages do so because of an unexpected loss of all or part of their income. Common reasons for this are the loss of a job, ill health, or relationship breakdowns. These occur even when economic conditions and lending standards are good, so there will always be some baseline level of mortgage arrears. Indeed, from a system-wide perspective, a mortgage arrears rate of 0 would be undesirable, because it would imply that lending standards were too tight and that credit-worthy borrowers were being denied access to credit. widespread increases in arrears are driven by macroeconomic factors, in particular rising unemployment rates, which lead to a widespread loss of income, rising interest rates, which create a high regular expense for borrowers, and falling house prices, which can make it more difficult for borrowers who are behind on their payments to get out of arrears by selling their property. So that's a fundamental difference in Australia to America. In the States, particularly with the housing crash, a lot of people were just get money handed to them with no capacity to pay, or if your house crashed in value, people would just walk away and give it to the bank. I didn't understand that that's what the Simpsons actually did in an episode when they walked away from their house. So it was interesting. Now I understand. I didn't get it as a kid. Appropriate lending standards that ensure that borrowers have reasonable income and equity buffers can mitigate the impact of macroeconomic factors on arrears, while poor lending standards amplify their effect. Well, what's come out of the Royal Commission? The liar loans, guys. Weren't there a few of those? In all states, increases in the share of household loans that are 90 days plus in arrears have been mainly driven by loans remaining in arrears for longer rather than by more loans entering into arrears. Graph 2. This suggests households are finding it harder to resolve their situation than previously, and is consistent with the softer housing market conditions. This is especially so in Western Australia, where house prices have been falling for some time. Liaison with banks suggest that more lenient forbearance and foreclosure policies have also contributed to the increase in long-term arrears rates. Now, I find that interesting because I've discussed this in a few other videos with regards to, our banks. We don't have a fractional system here. They need to ensure they have adequate capital and adequate assets. It's a little different. So all of these mortgages are actually part of the asset of the bank. They're part of their assets. So if they start foreclosing on these properties and then facilitate a sharp dump in the price of these housing, it's going to have an issue on their balance sheet, on their assets. So there is an incentive for the banks to be lenient. I know it doesn't sound like it, and hold off on foreclosing. We've seen that happen in America, where there's so many people, so many houses, mortgages in arrears, people still just living in them, or they haven't been foreclosed, because there's that incentive to keep it going. So, extent of housing loans in arrears. And here we can see, this is the chart that I'm going to add to my repertoire to call upon. We can see the increase, how it's gone up in the last couple of years. Look at Western Australia, guys. Look at Western Australia. Look at that spike, down, up. And the red, this is people who are more than 150 days behind in their mortgage repayments. Purple is 120 to 149, and light blue is 90 days to 120. So this doesn't count anyone who's only 60 days in arrears, guys. So if you're 2 months past, think about that, 150 days, that's nearly half a year. That's a long time to get behind, and that adds up. And I guarantee you, the banks will be charging you fees and extra charges. Let me know if you've been in this situation, guys. Let us know in the comments and how you got out of it, what you had to do. Did you just sell up, walk away? Did you declare bankruptcy? We had one gentleman left a comment where he declared bankruptcy and is now just traveling around the country. Might be a better life in some regards if you're in a deep hole. So in the recent Financial Stability Review, we used the bank's securitization dataset to look at how different types of home loans have performed in Western Australia over the past few years. As might be expected, loans that were originated with higher repayments relative to income and loans with higher starting loan to value ratios have much larger increases in arrears in Western Australia. Larger increases in arrears have been seen for self-employed borrowers who tend to have more volatile income than salaried employees. Arrears rates for investors have also risen by more. Investors in housing in Western Australia have faced falling rental income and the highest rental vacancy rates in nearly 30 years, though this has declined more recently. We also found that the increase in arrears for interest only and principal and interest loans has been similar, While interest-only loans have similar repayment performance to P&I loans, they are more risky for the lender as they can lead to larger losses. Since IO borrowers, interest-only borrowers, are not required to make principal payments, their outstanding loan balance need not decline over time. Because of this, IO loans increase the chance the loan ends up in negative equity if housing prices fall, and so expose the lender to a loss if the borrower cannot make their repayments. In Western Australia, around half of loans that were originated on interest-only terms and are in arrears also have negative equity. Over half, or around half. This compares to around 40% of P&I loans in arrears. Moreover, our interest-only borrowers are less likely to have buffer in the form of prepayments or balances in offset accounts. A bit more than 40% of IO borrowers have no buffers of this sort at all, compared to around 20% of principal and interest borrowers. Some of this difference arises because IO loans tend to be newer, and so they have less time to accumulate buffers. IO loans are also more likely to be taken out by investors who may have other liquid assets, but even controlling for these factors, a significant difference exists. That said, these IO borrowers who have buffers generally have much larger buffers. Nationally, around 15% of loans that are in arrears are also in negative equity. Damn. However, this is equivalent to just 0.1% of all housing loans, and the risks that mortgage arrears currently pose to bank profitability are low. So here we have share of loans balances in 90 plus days in arrears, mortgage arrears, and this is loans in negative equity, loans not in negative equity. Okay, so it's not too bad, but look at Western Australia, guys. Queensland, Western Australia, Queensland. There you go. Tighter lending standards should lead to lower arrears, but this can be hard to discern in the raw data. One reason is that borrowers' circumstances tend not to change so quickly that they fall behind on their repayments soon after taking the loan out. So newer loans tend to have lower arrears rates than older loans. For example, a 3-year-old loan is 4 times more likely to go into arrears than a 1-year-old loan. When credit growth is higher, the share of new loans also tends to be higher, so the arrears rate tends to be lower. This is in addition to the effect of the denominator. Another issue is that macroeconomic conditions, which also affect arrears, are constantly evolving. When we control for the age of loans and the state of the economy, we find that more recent cohorts have lower arrears rates than earlier cohorts. So specifically, those loans originated in the past 2 years have an arrears rate that is almost 40 basis points lower than loans originating prior to 2014. The lower arrears rates for more recent loans suggest that tighter lending standards have been effective. Do you think he's drawing an accurate conclusion? Well, this is the thing. We can't compare these recent loans until they are as old as the 2014 loans, or the ones prior to that. Then we can see if the circumstances change. Wait till these people in the recent loans also get in negative equity and bugger off. So here you've got average effect, controlling for loan seasoning and effects, arrears rates by originating years. So it kind of, okay, this is lower. I trust that this has given you some perspective on the recent evolution of arrears and some of the factors behind it. The experience in Western Australia provides an insight as to how housing lending in the rest of the country may perform if there was an economic downturn. Okay, so he's saying that Western Australia could be a canary in the Australian coal mine if we get an economic downturn. An economic downturn is definitely not our forecast. Rather, it seems unlikely that the national arrears rate will increase substantially from here. Improvements to lending standards have placed downward pressure on arrears. In addition, the recent reductions in the interest rates, while reducing the interest payments of indebted households, and support employment growth and housing market conditions more generally. Well, okay, let's have a look at a few things. I'll just remind everyone of this chart here. This is showing you all of the wage growth forecast predictions from the Reserve Bank of Australia. Very accurate, aren't they? Their predictions are spot on. Spot on, guys. And I mean, unemployment, it's also heading down, that we saw last time. Building approvals are trending down. They've spiked up, but maybe that's just the pre-Christmas rush, which I'm suspecting. If you look at the total building approvals, for the last few years, they've gone down. There's a lot of oversupply. So let me know what you think, guys. Do you think that Western Australia is indeed the canary in the coal mine for the rest of us? I know that is something that Martin North and John Adams are warning us all about, and warning a lot of people about. And I mean, it's easy to say if there isn't a downturn, we'll be fine. But they keep getting all their other predictions wrong all the time. It's unexpected, it's unexpected, it's unexpected. Or am I just reading too many of their things to see the pattern? At least he didn't use the word reasonable. But look at that jump, guys. Look at that jump. That's crazy. That is soaring. Anyway, let me know what you think. Like, share, and subscribe. If you're a fan of the channel and want to help me produce more content, I have a Patreon and a Subscribe Star where you can make a small monthly donation. I also have Amazon and eBay affiliate links where I receive a commission when you make a purchase that doesn't cost you a cent. And thank you to the people that made some purchases in the last few days. Appreciate it. One thing that's interesting, I see when people make a purchase, then I see when stuff gets sent out. I think someone bought something a while ago, and I'm thinking, why hasn't that got sent out? Why hasn't it got sent out? Then I'm realizing, because I looked into selling on Amazon, it's probably someone selling, from a remote factory, not actually from the Amazon distribution. So it's interesting seeing this side of it. Anyway, I also have PayPal and Ethereum if you'd like to make a direct donation. Take care, guys. Have a great weekend, and I will talk to you later today. Bye for now.